Good afternoon. This is Peter Resnicek from ShadowTrader.net and the Weekly Options Room. And I welcome you to this little shadow short, which is going to be talking about zero DTE options. I'm calling this part one because I hope for there to be some more of these. But today I had a decent zero DTE trade that I thought would really well illustrate how I approach this type of trading. And I know that it's a type of trading that many of you are very interested in, and we know that for a fact because the volume and growth in zero DTE options has absolutely exploded over the last couple of years, really. This has been going on for a while, where just an immense amount of the options volume traded is zero DTE, be it SPX, SPY, Qs, NASDAQ 100, all the stuff that has daily expiries has really exploded to the upside. And so what I wanted to accomplish in this video is to show you exactly how I approach zero DTE and what I do. So let's just start from the beginning. If you want to trade zero DTE, there are really only two things that can be done, right? And that is either to go directional, and we'll call that like an arrow like this, or to sell credit, and we'll call that an arrow like this. It doesn't necessarily mean that the market has to go sideways, but basically, if you think about it this way, only two things really happen in the market, but these two things are even more exaggerated in zero DTE because you have this very short time frame, and those two things are that you're either going somewhere and you're starting here and ending here, and thus you are exploiting that move via long calls or long puts, or you're not going anywhere, meaning that you pick a spot on the chart and you say, okay, we are not going here, and you sell the credits down here, correct? And by not going there, this goes to zero and you collect. So there's really only two possible avenues, and those are directional or credit collection. Now I feel that because of the nature of the short time frame, the credit collection path here is the easier of the two. And I would say 90% of the time I focus on the credit collection path. When I trade weekly options with my room, I mostly trade the opposite path directionally. I would say not mostly, I would say it's more 50-50. But obviously when my time frame outlook in the weekly options is anywhere from say 2 to 10 days, it's much easier to have a directional outlook because I've got plenty of time to make adjustments. I can be wrong for some time, then be right, etc. But with zero DTE, if you're going to go directionally, you have to be right that day. I mean, even if you started your trade at 9:30 in the morning, you've got some portion of 6.5 hours to make this work. And most people don't trade right at the open. I certainly wouldn't. It doesn't behoove you to do so. You're probably looking for a setup sometime after the first hour, after the first 2 hours or whatever. And you've got a very short window in which for this directional trade to work. And because we're talking about options, as in the name zero DTE options, remember there's time value, and that time value is moving against you. And so this is also why I feel that the short time frame lends itself better to credit collection rather than directional trade, because obviously with that time period so short, obviously there's risk of gamma, blowing up your delta, etc. if it falls down or moves up towards your shorts, but you have time working for you in a very aggressive manner when that theta decay is measured in hours rather than days or weeks or months, etc. So let's just start from that premise that what we're going to be looking for in general is credit collection. And that means that our job is to identify areas on the chart where price is not going to go. So you can see here, I'm just kind of circling highs and lows here. These are different inflection points where somebody can make a decision and say, okay, wherever price is now, in relation to these circled areas, I want to be short put credit here, short call credit here, short call credit here, short puts here, short puts here, short puts here, etc. This is just an example of some of the ways that that you could look at this. Basically, is you want to basically identify areas where there may be support or resistance, or where there were peaks and valleys before, and be trading against those. And those areas, excuse me, those areas of sort of rejection or pivot, if you will, or whatever, can be on a lower time frame, as we see here. We're just looking at on the day time frame, Or maybe you're looking at a larger time frame, right? If I go out to a daily chart, I can then say, okay, well, I'm trading in the middle of this day and I don't think we're going to get to this high that was 2 days ago. So I'm going to be short that premium there, okay? So that's kind of a brief overview of how I approach DTE, zero DTE rather. And again, I tend to favor the credit short way of looking at it. So let me show you an example from today, a real life example of how this played out. Because as I was saying, I don't do zero DTE every day. I kind of do it when I feel that it's warranted, when I feel like there's something there basically that would lead me to do it. So today we did a zero DTE play using the NQ, and we used QQQ short, which I'll show you in a second why that was. But we chose the NQ, and we chose the NQ for a reason, because as we were looking at the market here, you had clear example here, or clear inference here from the 9:30 a.m. open. This was a very important congestion area in the overnight trade. You can see this is about 7:30 a.m. to the open. And if you count these dots that I put here, there were about 10 times that the market found resistance at this level. And then early on, you can even see there was resistance once again. There was opening drive lower, then 100% retracement higher, and then that move went right to where those highs were in the overnight session on this 24-hour chart. And that's important because once the market turns around and retests this area is a strong buy. So if you wanted to, which I did not do, however, I'll show you this in hindsight. If at that point you wanted to sell credit here below the low, that would have been a legitimate area to do so. But only here once you make this retest, not earlier or later, literally right there, right here in this bar. And again, the reason being because we know this whole thing is very resistant. The market sells off away from it. It tests that level. Then when it backs off away from that level, it makes a higher low and retests that level. Right here is either a futures trade long or a DTE zero short right here, okay? So again, in hindsight, however, I didn't take that trade. Watching the market, and it goes and makes a new 2-day high, much higher. And here where it starts to pull back, here's where I start to get interested in the potential zero DTE below here. Why is that? Because as I see the market pulling in, I believe that this area where it tried to get through like 10 times should be supportive rather, right? Since we're coming back to it now on a retest. So I'm going to watch this area very, very closely, and I'm going to use the tools at my disposal to see what happens as the market comes back down to this area. And when I say use the tools at my disposal, now because I'm trying to initiate something that is zero DTE, it's really akin to a day trade. Hence, I need day trading tools. And what are the 3 main day trading tools? They are the 3 lines, right? It's something that I invented called the 3-line method, right? Scott Schneider, in the futures room of our live trading suite, he trades this every day. He talks about the 3-line method. The 3-line method is a way of trading, or day trading, I should say, ES or NQ, according to using the movement of the 8-period moving average exponential, 8 EMA, 21 EMA, and VWAP. And this VWAP, it should be noted, is from midnight. And this is very, very important. If you are day trading stocks, then the equity VWAP is always at 9:30 a.m. Eastern. It's on the open. That's where the VWAP starts. In futures, you can make a choice as to where that VWAP should start. And for me, that VWAP is always right here. You see where it says June 9th? And look where the purple line starts. Right there's the start. So I'm starting it right on the beginning of June 9th, which of course is the 00 mark or midnight of June 9th. And I use this exclusively because I have found in my experience that it just works. It works really, really well, better than any other reset in the VWAP. So that being said, look what happened in the NQs. In the middle of today, this is Monday, June 9th, look what happened on the VWAP as it came in here. And remember, this is our support point. We know this is going to be supportive. So if you're an aggressive futures trader, you literally should have limit orders right here. And you would have been very rewarded for that. That would have been a super easy trade. But I'm not looking to do any futures long. I'm looking to do 0 DTE. And I want to sell the puts under here in the QQQ, because obviously the QQQ corresponds to the NQ, which is the future that I'm looking at. And so that being said, I'm watching very closely, and look what happens. Right to the penny. And when it falls down again, right to the penny. And then it does it a third time, right to the penny. So obviously this level is the level of support in the NQ. And when it comes down on this first time and catches support and starts to bounce, I then know that if I do DT0 here on the QQQ puts underneath, I have a very, very legitimate stop right here. Meaning if it retests and goes back again, I think, okay, well, it's retesting after 5-10 minutes, it's going to go through. So if it goes through, not just touches, this is very, very important because obviously I got multiple touches here and it didn't go through and I'm still in the trade. If it goes through, then I can reassess the situation of being short these puts here. So knowing that I'm looking at the NQ, the put has to be in the Qs. And the next question is, which one do I choose? Well, I want to be short under the low of the day. I want to be short with whatever corresponds to this. And you can see that this level here is 529, right? That level corresponds perfectly to 529. And if you look at the alert that I put out in my trading room, look at the strike that I chose and look at the time that it happened. I sold the 528 because I wanted to be $1 below. And also look at the time, right? There's the timestamp on it. And mind you, this is happening not only in real time via these timestamps, but this is happening real time via voice in my trading room. These alerts that you see in print that are timestamped, they are just there to create a record of what I say. And so that everybody knows that the trade was actually done at that time. And all of these entries here, these are cut and pastes from actual fills from my account. I take them right from my account. But so look at the strike here, as I was saying, and look at the time. That's important. Why 11:29 a.m.? Well, simply because if we go back to that, we get on that NQ chart here, look at the test here. This is the 1125 bar that runs from 1125 to 1130. So as soon as I see this bounce up and I see this is holding, within this bar, I take the opportunity to sell the credit. So the timing is really perfect. And as I was saying earlier, what it also does is it gives me very, very good trade entry and trade location in that I know, okay, if I sold that put, which as you can see in the alert, I got 33 cents. If it goes back down here, what's it going to trade for? Maybe 36, maybe 37. I can kill the trade immediately for a 4-cent loss or whatever. So because the location is so good, the risk reward is excellent. Right? And you can see how now we're having this conversation at 3:25 p.m. Eastern, correct? And to show you how this looks like in real life, so to speak, right? Look at what the puts have collapsed to. There's the trade there. You'll notice that my actual fill is only 31 1/4. Why? Because I actually sold more as it was bouncing more, like I did 33 cents officially with my subscribers. That was my first entry. But then I kept selling some more. And I wasn't able to get that many off. Usually I try and make my size more like 50, 75-ish, 100 max. In this case, I just didn't get off as many. But it's still decent, right? Because 20 at that level, you're talking about 600 on that DT0. So it's not bad. I'll take that. But I just want to show you, that's how it kind of looks in real life. And don't forget that, this is very margin intensive when you are naked like this. But the beauty of DT0 is that this could always be a vertical. This could look like this, right? With something down here at say 520, and you can alleviate this completely. You don't need to be in a huge margin situation in that sense. And the reason I say that this is easy to do with DT0 is, remember, because it's DT0, and we know that all the option premium is spread out like this along the bell curve, and this is at the money. Well, when this whole tail here and this whole tail here is defined in hours and not days, weeks, or months, then there's really cheap premium here at the tails not too far away. And you should use that to your advantage, right? It's much easier to find a garbage call or a garbage put that's trading for 1 or 2 cents when it expires that day, excuse me, than it is when you're trying to find that garbage call or garbage put. And look, I just got filled at 2 cents, by the way. I always put in an order at like 2 cents. It's easier, than if you're looking for that 3 days out or a week out or even a month out. It'd be very difficult. The longer you go out, there's still going to be premium out there. So use that to your advantage, I would say, when you do DT0, okay? And the last thing I'll say about this trade simply is that, and we have to go back to the chart to this, is try not to try too hard to look for this trade all the time. Let it sort of present itself to you. Like today, it just seemed dead obvious to me that I knew that the market was strong once it had cleared this area. And I was thinking, okay, if it moves higher, where's it going to pull back to? It's probably going to pull back to this area. And then I can use the tools such as this midnight reset VWAP to get real granular and say, okay, is it going to get, if it gets here, I'm going to expect a bounce right off it. I'm going to expect a bounce right off it, etc. And lo and behold, it did perfectly. But again, sometimes the trade just isn't there. You can't just automatically assume. As I was showing you earlier in the video, I was saying, look, here are the points. Well, of course, these are the points, but they're all in hindsight. You can't just expect that all of these are that you're going to be able to trade DT0 against them. But when you have a confluence of things coming together, like we did in this particular trade, where we had this setup occur for us of the resistance overnight coming down here, back off, then retest right here, then come up and retest. Now we've got a lot of different planets lined up. And now doing the 0 DTE at that moment makes perfect sense. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.